Hey guys, I'm Mike and here's another video for you regarding bonding. Now, if you're a contractor and you're looking to shift from residential projects into public work or even commercial jobs where you're going to be bidding and working with cities, municipalities, general contractors, you need to start understanding and preparing your company to be bondable. Bonding is important when it comes to public work and commercial work. And in today's video, I'm going to give you some steps to prepare your company when the time comes that you're required to submit a bond. Hey guys, if you enjoy my YouTube channel and you find my videos and my information helpful, please remember to like this video, subscribe to my channel, click that little notification bell so that you're made aware of any videos that I release in the future. Also, if you have any questions or if you need any help, comment on the video. I reply to all comments. We appreciate your support. Bonding is something that you're going to have to get used to if you're starting to work in public works jobs or if you're starting to bid projects for any type of public work or even commercial jobs when you're dealing with large general contractors, and you need to start preparing your company to be bondable. Bonding and insurance are not the same thing. Here's one way to really understand the difference. If you have an insurance claim, you have $1 million general liability policy, you have a claim against that policy, you paid the deductible, the insurance company, as long as it's a covered claim, pays the damages, the indemnification, you're made whole, you don't pay anything back to the insurance company. A bond is completely different. If you have a contract bond in place, whether it's a performance bond or a payment bond or even a license bond, if you're in California, for example, you have to post a $25,000 bond to operate as a contractor in the state of California. If someone makes a claim against that bond, whether it's a client or supplier, a homeowner, whatever it may be, you have to pay that back. If the bond company decides to pay, they will come back after you to pay back the amount of the claim. Keep that in mind. The underwriting is completely different. Bond companies want to see financial data. They underwrite heavily on credit, on financials, the health of the company. So let's start talking about ways that you can prepare yourself for bonding. Now, step one is understanding the types of bonding that are out there. A bid bond is the first one. These bonds are required as part of the bidding process to assure the project owner that you'll enter into a contract if your bid is accepted. Think of it as a pre-qual. Another reason why the project owner asks for bid bonds is so that they know that if they give you the job or if you win the job, that you could turn that bid bond into the next two types of bonds that we're going to talk about, which are a performance bond, which guarantees the project owner that you'll complete the work according to the terms of the agreement, and then also a payment bond, also known as a labor and material bond, which guarantees the project owner that you're going to pay your subs and your suppliers for their work and material. Now, if you have a bid bond and you turn it in with your bid, now if they award you the job, you can then produce the performance and payment bond. Step two is assess your financial standing. I said this before, contract bonding requires a strong financial standing. Bonds are a form of credit. So before you apply for the bond, start to get ready. Start to determine if you meet the requirements. The size of the bond also is going to determine what level of financial standing you're going to need. There's really two types of bonding programs out there. One is express bonding. Let's say, for example, the bond company will qualify you for $750,000 per job. In express bonding, they're only going to check your credit. So reviewing your credit score and your credit history is really important. There might be some items on there that are reducing your score that you can clean up. You can go back to the credit bureaus. You can ask for things to be removed. Another problem is that for the higher risk bond programs that may accept lower credit, they're going to charge you a higher rate once the bond is produced. Understand your credit report. See if there's anything you can do there. Review your financial statements. Now, as you start to get into submitting full-on bond programs outside of the express bonding program, and this is when you start to have to get to higher limits, people that need $1 million, $1.5 million, $2 million and above, which by the way is not guaranteed that you're going to qualify for that. It's not easy. Start to review your financial statements, your balance sheet, your income statement, your cash flow statement. Get that all that stuff in order. If you don't have good books, if you don't have a bookkeeper or a CPA, make sure you start getting all that stuff in order so that when it comes time to submit for the bond, you have everything you need. Of course, as you know, cash flow is very important in construction, public works, commercial jobs. It may be longer for you to get your progress payments. The bond company wants to make sure you have the capital to perform and also pay your labor and material. So this all goes hand in hand with underwriting your bond. So make sure you have enough capital. Line of credits really help here. Step three, build a good relationship with your bonding company. You should really do this through a good independent insurance agency. Insurance agencies like ours, we are licensed and we are trained to help clients with contract surety bonding. The relationship that we have with our clients over the years allows us to form a nice bonding relationship with our bonding companies so that they have a bonding program. A lot of our clients, we help them get bonding capacity. We help them finish their jobs and clear them. Network with bonding companies so that they build a track record of successful projects, and that will start to help them build credit and elevate the amount of bonding that the surety company is comfortable providing to the contractor. And when you work with the same agent and the same broker that knows your financials, that understands when updates are needed, that knows what bonding programs you've been with, that understands the bonding market, that can shift you if they need to, that's really important to develop that relationship and start to build credit with the agency and the surety company. Number Number 4, strong internal controls. I talked a lot about this before when it comes to accounting. Having a good bookkeeper that stays on top of all your inputs, your general ledgers in order, your financials are done on a timely fashion. Implementing a strong internal system, this all plays hand in hand. Having a strong accounting system, a strong project management system. Bonding companies, a lot of times, they want to see your work in progress. They want to see the work on hand. They want to make sure, again, that you're not overwhelmed with current projects that would prohibit you from performing the job that they're going to bond for you. Strong project management systems, strong risk management practices to make sure that you're not taking on loss, or that your loss prevention's in order to mitigate that risk so that it doesn't affect your projects and the ability for you and your employees to perform and complete the projects. Be prepared to have not only year-end financial statements all prepared, but if you're going to start submitting to be bonded in the middle of a term, say for example we're in beginning of Q2, but at this point you should have your Q1s done. But make sure you get those in order. People that are on your financial team are up to date, your books are good, in order, and they're clean. Now step 5, and this is the last step we'll talk about, is to be ready to provide detailed information. If you go out for bonding anywhere outside of express bonding, be ready to submit information, financial statements, detailed project history, a business plan, anything that you can send in that helps the surety company or the underwriter feel comfortable working with you and bonding you. Because remember, bonding is a form of credit, not insurance. That's what you're going to want to submit. A good insurance broker is going to ask you for all that. They're going to request all that information from you where you can easily send it, but you're going to want to be prepared and be ready to go. But if you're starting to shift now into public works, into school district work, into municipal works, into commercial work, you have to prepare. You're going to find that bonding is more prevalent in that space. It's best that you know your costs on bonding, your bonding capacity, so then you don't waste time bidding jobs that you can't bond anyway. So if you have any questions, feel free to give us a call. You can call me directly. I handle all the bonding for all of our clients at the agency. I'm the bonding quote unquote kind of specialist here at the agency. 858-384-1507. Again, my name is Mike. You can email me, mike@foagency.com. Again, remember, if you have any questions, comment below. I answer all of them. Head over to our website at foagency.com. Don't hesitate to reach out if you need help. Thank you again for watching this video, and we hope to see you on another one very soon. Take care.